Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about bank failure number 5 for this year. That's right, ladies and gentlemen. Just when you think the stock market looks good, just when you think housing prices have topped out, just when you think the Federal Reserve increased their interest rates, which is not a good thing for consumers, now another bank fails, the 5th one of the year. It's Kansas Bank this time. We're going to go talk about that one in the Heartland, ladies and gentlemen. So stay tuned. This is a dichotomy of extremes. On the one hand, stocks are looking good, as I mentioned. On the other hand, banks are closing. Let's talk about this and much, much more. Please engage and welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, please share the videos because you never know who's going to be looking for a little bit of help and who doesn't understand that keeping your money in a bank may not be the best thing. But I will start this out. Another bank immediately took over called Dream Bank. We're going to get into it shortly. But first, we got to go to the Stop Struggling Now YouTube channel page. We have our members. They are shown. That means they're members of the channel. Here's a few of them here, courtesy of YouTube. I want to thank them so much because they support the channel. And underneath the community tab, members of the channel receive special messages and they receive 1 or 2 videos per month specifically for them. They also can join me on any live stream, on screen, any of them, because they always have the link, which they find on the community tab. And also, on Wednesday night live streams, only members with the icon can be next or be in the chat room. Now, let's get into it, shall we? Because you already saw the preface. Here we are. Banking turmoil arrives in small town USA with Heartland tri-state failure. Oh my. On Friday, they announced it while everybody's getting off, planning their weekends. They don't want to get anybody afraid that another bank failure has occurred and they've already made insider deals, because I don't know how you can actually do it any other way. Already have things lined up for another banking institution to take over your depositors, which is very interesting. The banking turmoil has arrived in America on Friday night when a tiny 4-branch bank in Kansas failed, becoming the 4th lender to be seized by regulators this year and the 5th to fold altogether. Here it is. I'll have a link down below to this. This is going to be a short video because I want to know what you guys think. Do you think it's worth keeping your money in banks and getting the 4 or 5%? And in this case, the depositors have been saved. But we're going to keep going because you have to understand something right here. They only had 139 million in assets when it went down on Friday, and that's according to the federal FDIC, which is crazy. The other banks that failed thus far this year all had assets of more than 100 billion. Unbelievable. And the biggest, which was First Republic, had 229 billion when it was seized by regulators in May, becoming the 2nd largest bank failure in U.S. history. Are you understanding, ladies and gentlemen? This is why it's very, very strange that you're having bank failures, but then you're having stock market increases. You're having real estate at all-time highs damn near still, even with all of this rate increases by the Federal Reserve. Let me know what the hell is going on. We kind of know. It's because you have to actually be tricking the market in order for things to stay up. And their tricks are coming to an end because you're having bank failures. So I don't know if they're going to mention it here, but let's see if they are. But again, it's not entirely clear why Heartland went down, says the Kansas Office of State Banking Commissioner, which is pretty crazy. I don't understand. Kansas banking industry is unaffected by this event. Kansas banks remain strong. Heartland is one of the thousands of small community banks that serve local areas across the U.S. That's pretty much it. I don't understand, quite frankly, what's going on. But this is getting to be insane. I want you to know something else. Dream Bank, again, took over. Just so you guys understand. Another community in that state, Dream First Bank of Syracuse, agreed to assume all Heartland Tri-States deposits and purchase essentially all of the failed bank's assets, according to the FDIC. All right, so there it is. Dream First Bank. They're the ones that's going to be taking over. And now look at this. Dream First had $480 million in assets, March 31st, making it 1,515th largest in the U.S. Its founding dates to 1906. All right, everybody, listen up very, very carefully, because this is getting out of hand. There's things going on whereby, first of all, inflation numbers that you know about, that the United States government is telling people it's actually not true. And the problem with the not true part is what they're giving you is true, but they're taking things out to lower the numbers. All right? They're manipulating the numbers is what I should be saying. So if I can't trust that inflation is 5% when it's really 15, that means also I can't trust that a bank saying they have $150 billion or $150 million in assets, is that really the value of the assets? Because where I come from, it used to be assets minus liabilities equals a number. And what they're not mentioning on all these bank failures is a simple mathematical equation. What are the bank's liabilities? Failure would indicate the bank is over leveraged. They have higher liabilities than what they owe. And of course, as everybody knows, they take your money and they supposedly lend it out, get money back. Who knows? But this is all going to be flushed out this week. So you guys make sure you tune in this week, July 31st for that week. And I'll be giving an update once we find out what actually happened, because this is starting to be crazy. And they've been saving banks along the way. So again, is that going to be the safest place to keep your funds? The safest place seems to be keeping them in the stock market, right? That's where it seems to be, where it works for you, because that's what they generally care about. So let's see. Let me know what you guys think. What's going on? Bank failure should not be occurring at this rate, especially when they have, like they said, the other ones had over billions of dollars in assets. These guys have hundreds of millions of dollars in assets. They still have failures. What they didn't say is brokerage account. So I don't know if Heartland had a brokerage side of a business, but notice they didn't mention anything about the brokerage account that would have to do with stocks. But anyhow, that is it, ladies and gentlemen. I just wanted to give you this update because this is crazy what's happening. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you have to buy assets that pay you. That's the only way we are going to survive after the Roaring 20s and during the Roaring 20s. But assets are going to cost a lot more 3 years from now, 5 years from now, because interest rates will be reduced. And I'm referring to the federal interest rates, the federal funds rate. It's going to start being reduced again. I'm betting on later this year. So let me know what you guys are thinking because we're going to talk about this. I'm pretty sure over the next 6 months, 7 months, there'll be another bank failure or another bank being bought out secretly. But either way, we're going to have this occur again. And with all that said, keep your head up, keep moving, and I'm out.